these people are not serious about tightening the government's belt. Not in China, not in the UK, not in the US. You can bet that whoever wins on November 5th, and we also have, of course, congressional elections, when push comes to shove, they always lift the debt ceiling. They always pass the spending bills, and they never rein in spending or the deficit. So is it any wonder then that our favorite metals did so well yesterday? Wednesday, September 25th, 2024, Monaco 64, home of alternative economics and contrarian views. So China, and in particular the PBOC, their central bank, has joined the race to the bottom. Yes, they followed the Fed rate cut of 50 basis points by a relatively big cut of their own rates and also a cut of their reserve requirement ratio. And we're going to look at what else they announced in terms of stimulus. And I'm also going to look at the UK. We've seen that the UK's Chancellor, Rachel Reeves, is looking to fudge the numbers to make the national debt look smaller so she can spend more. So yes, when push comes to shove, unfortunately, the modern day statists continue to espouse Keynesianism. And what does Keynesianism really mean? Well, it means more government spending, more inflation, more currency debasement. And is it any wonder that gold and silver did so well yesterday, in particular silver? Of course, silver is still below its all-time high, but gold made another all-time high above 2,650. So before I start, I just want to give a shout out to one of my sponsors or affiliates, Dirty Man Safe. And in the current environment in the West, where the rule of law is so fickle, where we were seeing like tens of thousands of illegal immigrants come through our borders, not just here in the UK, but in the US, you want to make sure you keep your valuables safe. So check out Dirty Man Safe. There's a link below in the description. And if you click on that link and you do choose to buy a Dirty Man Safe, you get 10% off and a special gift from them. And they will ship to the UK as well. They'll ship, of course, within the US. And yeah, what can you keep in Dirty Man Safe? Well, you can keep some of your gold and silver stack. You can keep even your hard wallet for cryptos if you're into that. Documents, valuables, anything really is just a good option to have. So back to China. So yeah, today, 25th of September, just a week after the Fed surprised really most of the market with a cut of 50 basis points. Yes, a cut was expected, but it was more like 25. So what is wrong in the system? Is it a credit problem? Just like Simon Hunt said the other day in one of the interviews he did with me. Yeah, he could be right. It could be other things as well. It could be that they see the economy in a recession already. After all, the curve has uninverted, and we're already at plus 20 basis points between the 2-year and the 10-year. And usually it takes 4 months from when the yield curve reaches its deepest inversion for the recession to start. And of course, the curve needs to be positive again for the recession to start. So by my calculations, the deepest inversion we had was in July this year. So you add 4 months to 7, you get around November time They might not announce a recession in November, but you can bet that by early next year they might say we were in a recession. And I think it's not surprising then that China has, as the FT describes it yesterday, and this came out overnight, like a day ago, and I didn't cover it yesterday because I published Simon Hunt's interview. But yeah, FT describes it: China unleashes stimulus blitz to lift growth. Yes, they have their own domestic problems, but it doesn't help if your biggest, probably the biggest export market, the U.S., is slowing down as well. So it's not surprising. This is a signal as well that the economies in the West are not doing well. So let's quickly go through this article, and we're going to look at some of the Chinese data here. Then we'll look at the UK, what Rachel Reeves, the Chancellor, is proposing. And then we're going to look at the markets, and we're going to look at gold and silver and the miners that did very well yesterday as well. So central bank cuts benchmark rate and unveils support, as I said. So China has unleashed a swath of stimulus measures, including cuts to its benchmark interest rate as Beijing battles a slowdown in the world's second largest economy. So when you've got the two largest economies in the world slowing down, yeah, it's not surprising. Yes, we are all Keynesians now, unfortunately, and governments and central banks have to intervene every time there's a problem. And yes, they've been doing it for decades. It started out actually in the early 30s with Herbert Hoover and then FDR, and it's been going on ever since. Prior to that, governments left the economy alone and let things work out by themselves. But anyway, let's look at what rates they cut. Well, they cut the 7-day reverse repo rate, which is a short-term rate, from 1.7% to 1.5%. It doesn't seem that much, but considering rates there are relatively low compared to the West, it's a fairly big cut. It's the equivalent to a 0.5% cut, I would say. And they also cut what's called the RRR, or Reserve Requirement Ratio, and by 0.5 percentage points. So that's the amount of reserves that the PBOC, the Chinese Central Bank, requires banks to keep. And the Fed, for example, has had the reserve requirement for the US banking system. Guess at what rate? At 0 since 2020. The Chinese, yeah, they're still relatively high. They're at 7%. They were at 7% that you need to keep as a ratio, and now they're cutting it to 6.5%. So you can see by this chart here, China's reserve requirement ratio from January 1985 to August 2024. So now they've cut it to 6.5%, and you can see that it's been a race to the bottom of that ratio. They've been stimulating credit, well, for many years. As you can see, it was almost at 20% back in, 10 years ago. So they're continuing to do that. What else does it say here that they're going to do? Well, it says in a rare public briefing on Tuesday, the People's Bank of China also announced government funding to boost the stock market and aid share buybacks, as well as more support for the stricken property sector. So they're almost acting like the Fed now, the PBOC, so they've joined the race to the bottom. Here in the UK, I'll go quickly over this article here. Rachel Reeves, she's the Chancellor of the Exchequer, equivalent of the Treasury Secretary. She prepares to rewrite debt rules to free up $50 billion in spending. Chancellor gives clear signal yet over desire to relax rules ahead of maiden budget. While the budget is going to be announced on October 30th, a few weeks ago, or a month ago, they said, well, we need to tighten our belts because we got a $22 billion black hole in the fiscal situation. Now they just decided to tinker or fudge the the debt number. And how they're going to do that? Well, instead of they're going to extract or not count what they consider government investment from the national debt. But do governments really invest? No, they don't. They just tax you, spend, and waste your money. I've never seen a government in the West, at least, or in the US, that invests and gets a great return for the taxpayer. No, they don't. So this is just another fudge. It will be interesting to see how the bond market or the gilt market reacts to this. It's still early days, but it shows that these people are not serious about tightening the government's belt. Not in China, not in the UK, not in the US. You can bet that whoever wins on November 5th, and we also have, of course, congressional elections, when push comes to shove, they always lift the debt ceiling. They always pass the spending bills, and they never rein in spending or the deficit. So is it any wonder then that our favorite metals did so well yesterday? And why are they our favorite metals, especially in particularly mine? Well, because they're real money, and gold and silver, of course, and they can't be created out of thin air or conjured up by statists like the PBOC, like the Fed, like the UK government, out of thin air to stimulate what they consider Keynesian policy of stimulating demand, instead of allowing the free market to do its job. And talking about free market, I was reading that Keir Starmer, the Prime Minister, made a speech yesterday at a Labour Party conference, which is supposed to be a foundation of our democratic system, and they meet every fall to talk about stuff. And he said, yes, the markets are dynamic and we need them, but I don't trust them. He said, we need to control them. So there you go. It's not going to stop. So yeah, gold made a new all-time high. Let's have a look where it was exactly. Well, actually, we made a new high this morning at 26.70, and I'm speaking here. It's 8 a.m. London time, or 3 a.m. Eastern time. Yesterday the high was 26.64, so we continue to move ahead in gold. Silver, I was talking to a friend yesterday who's into gold and silver and the miners. He's also a bond guy, but he's shifting a lot of his wealth into the precious metals, and he's been doing it for quite a few years. He gets it now. And I was speaking to him, and silver was struggling to break through 31. And then an hour or two later, we were above 32. So it's looking pretty good. I see that the GDX and GDXJ closed at over 2-year highs as well, which is a good sign. And I see that the gold to silver ratio is still highly elevated, but it's starting to come off. I think 84 is a key level. And then on the downside, 80, the lower the gold-silver ratio goes, it means that silver is outperforming gold. And that has been always a prerequisite for a really major bull market in the precious metals. We see silver outperforming, and a lot of times it takes time for silver to eventually catch up, but I think it is. What else? What other indicator? And the reason I'm giving you these indicators and talking about the prices is not because you should be trading these things, but it just gives you a confirmation that gold and silver, and I think also the general commodities, are going to continue to do well because, well, they're going to continue to inflate. I mean, gold made a new all-time high, not just in dollars yesterday, but also in euros, in Swiss francs, in the British pound, in the Chinese yuan. So yes, the dollar is weaker, but the bigger picture is that all fiat currencies are sinking, and that's something I've been warning about since around 2006, even before I started this channel. So yeah, the other indicator that I think is quite significant is the Dow to gold ratio. And I've been looking at this chart here, and we've had support around 16 since around the end of 2020. And right now, as I speak, we're around 15. Well, we're just below 16 because this doesn't update the Dow, because the Dow index itself is closed right now. But the Dow futures is down and gold's down slightly. So keep an eye on the Dow gold ratio. All you need to do is take where the Dow is divided by the price of gold in troy ounces, and you'll get that. And yeah, I think this is significant because it shows that we could see a lot of managed money move a little bit into precious metals and commodities. This is what this is signaling, in my opinion. So as I said, it's just around 8 o'clock London time. So let's have a quick run through the markets. Spot gold right now is at 26.53. 70 is right on the lows. It's down about $3.50. But I'm not complaining. Gold, I mean, above 2,600. We started the year at 2,063 in dollars. So we're up, I mean, almost 30%. Which means the dollar is down 30%. Anyway, the high, as I said, was 70. What about silver? Well, silver made a high overnight of 32.30. So we're very close to 32.50. Right now we're at 31.73, right near the lows. It's down about 1%. But this is normal. We're going to see a little bit of profit taking. Could the bullion banks come in and smack gold and silver, or Mr. Slammy? It's possible, and it is frustrating, but hopefully by now you've become patient and immune to those. I've been watching, experiencing these slams or smackdowns of gold and silver ever since I started following gold and silver in 2002. I could see there was something funny in the market. And yes, it can be frustrating, but what you need to realize is that there is no other option unless you want to allow the status to debase your savings and leave it in fiat currencies. The only way out is to put your savings, not all, of course, you might want to invest it, but monetary savings in the precious metals, I would say. Anyway, the Dow futures is down 120. The NASDAQ futures is down 85, and the S&P is down 15. I saw that the Chinese markets finished up again today, about 1%. We'll have to see what evolves there in China. What about the currencies? They're fairly quiet right now. Really nothing to write home about. WTI crude is down 0.5%, 71.80, and Brent is at 74.26, down about 0.5%. Yeah, and high-grade copper, which is copper is a bellwether for the economy. Many people think, and I think the fact that it bottomed the beginning of September just above 4, and we're now at almost 450, is an indicator of of stimulus, especially the Chinese stimulus, but also the U.S. stimulus, European stimulus. You can bet the central bankers are not going to allow things, nor the governments, they're not going to allow a deep recession. They're going to keep printing and spending fiscally as well. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.